Okay, so we're back here with Mr. LaSalle and Mr. Lalonde. 8 months ago, last update, and lots has happened, and we're very excited to go through it rigorously as always. So let's just start with the corporate, Benoit. You just announced the race and you closed it very swiftly again, just like the last time. Can you just tell us what was the justification for doing this race and who participated? Just give some context.
Yes, so thank you, Gorm, for inviting us again this quarter, should I say, or this half year, as we do this twice a year. Look, again, we did raise money. We had a strong first half of the year. David did a lot of drilling. He was up to over 70,000 meters at Boumadine. We had a lot of work done as well at Zgounder. And one criticism that we had in the first half of this year was that our balance sheet was a little weak, if we can use that word. Is our cash balance was around 40 million on a market cap of 1.5 billion. People felt that the cash was a little low, and though we did have EBRD as a line of credit of 25 million, and we have been attacked in the past 6 months by some hedge funds that were trying to really push us down, hopefully that, thinking that we would do a raise. So after analyzing all of this, understanding what David wants to do with Boumadine and the fact that we would like to take that to production as quickly as possible with Zgounder Regional, which we're going to talk. At that point, as a group, we felt that taking the money was the right thing to do. The money was readily available. Our largest shareholder, largest fund, was willing to commit and become the lead order into the fund. And as you know, we don't disclose name because they don't like that, but you can look it up on Bloomberg. So our lead shareholder became the lead order on the financing. And then we had a book that was around $300 million for a financing of $100 million. So we increased it a little bit because there were a couple of funds that gave us all or none orders. So we had all, what they call killed or filled. And we filled them. Those were all existing shareholders. So I would say that 95% of who's in the book is already a shareholder. 100% are long-only funds. And so we were very happy with who came in, what we gave them, the allocation that we gave them. And as of this morning, I just look at this morning, the short position increased by 2 million shares in Toronto and decreased a little bit in the States. So we're still, approaching 21 million shares short on AYA. So the funding did not fill the shorts, which we didn't want to. And when I spoke to Rick Rule last week, we talked about that. He thought it was a very successful financing. And he said, what I like the most is you did not fill the shorts, which we didn't. So we wanted to raise the money. So today our cash balance, with the 25 million EBRD facility, we're probably around 170, $180 million of cash. And when you will speak to David, he'll tell you how he will spend that. Because that was the whole purpose of accelerating Zgounder, which on the Zgounder regional front is looking very, very good, but also Boumadine, which is our star project. As we say, it's a tier 1 asset in a tier 1 jurisdiction with a tier 1 team. And with that, we should make this into a real success. And that's why we raised the money. It was the banking syndicate was well put together. The money was available. You saw that. We closed that in a matter of a few days. And now it's behind us. And we now are focusing on delivering results.
So in summary, you gave away about 6 or 7% of the company, which is small, right? And you got this, you answered one of the big sort of parts of the thesis for the short sellers, that you had a low cash balance, which is addressed now. And we'll get to what you're actually planning on doing with these funds, because AYA, as we know, have allocated their dollars and turned $1 into many more dollars, generally speaking. So all around. It looks very positive. No complaints on my end. Just briefly, the short interest, Benoit. Are you aware what their thesis is? Why does this exist? Why does it persist? What is their short thesis? Do you know?
Yes. So, for the past 4 years, since April of 2020 till November of 2024, we had been one of the top performing stock on the TSX.
Yep.
We were part of the TSX 30. We had given our shareholders a ride from 60 cents to $19. And of course the algos, because it's all, as you know, algos. The algos have understood that. They looked at the pattern of our trading, and they started shorting us in November of last year, really in a very aggressive way. And so we are aware. So they went short AYA and long SILJ or JDX or some specific companies at times.
Yeah.
But it's a structured transaction. It's not a naked short on AYA.
Mm-hmm.
It's not a call that AYA is not going to deliver or that. Yeah. Not at all. It's a structured transaction.
Arbitrage sort of thing or whatever.
It is arbitrage. They said AYA is performed so well.
Yeah.
There should be a correction. We'll take that money. We'll put it somewhere else. And now it's our job, and it's the management's job to correct that, which is we need now to perform better than the SILJ or GDX. And if we do perform better, at one point, the structured trade will turn negative.
Yeah.
And when it does, then they will start closing those transactions. And in closing the transaction, they'll be buying AYA. So with the team, and David is the leader of what's going to make this happen, because it's all about making Boumadine even a bigger project than what it is right now. And we know that we do have the geology for that. So we're not concerned. It's not a naked short. It's not a call on operation. It's a structured transaction.
So I guess one piece of information that could be interesting to know. Do you know what their average open for the short is? What share price is average? Is it like 13 cents, $13?
It is around 13.80, 13.85. That's kind of the trigger point.
Okay.
But don't forget, on the other side, they bought something.
Yeah, exactly.
So the buying, depending what they bought, they look at it on a neutral basis. So the fact that they shorted us all the way down to 9 is one thing. But look, so but I'm extremely confident that in the next 12 months, with what we see, with what we have, we will reverse all of this.
Yeah. And we'll detail, what the remaining of the year is going to look like, obviously, soon here. So balance sheet, you covered that. You said 160 million. Is that Canadian or US, Benoit, that you have available in cash?
Available in cash. When I gave you 180, it's Canadian. So it's in US, it will be about 130 US.
Yeah. Okay. And just a quick reminder, obviously most will be aware, but the debt repayment schedule for the Zgounder EBRD debt, can you just remind me? You have a holiday up until next year, right?
Yes, we do. So we start to pay back in 2026.
Yeah.
You saw the press release this morning on EBRD. We've announced that we've closed the 25 million line of credit with EBRD. Also in there, we say that we're strengthening our relationship with EBRD.
Mm-hmm.
EBRD has indicated to us that they would like to review the project finance to a long-term loan. So in the project finance, we have a repayment schedule of 4 years starting in 2026. So 25 million per year each year thereafter. But in Q3, Q4, we will look with EBRD at restructuring that project finance, which we will, in the coming months, we'll be able to announce what's called financial completion, meaning your lender has agreed that you've completed the project, and now you can move that loan into a long-term debt rather than a project debt. So that's going to get done in Q3, Q4. But currently, you're right. The repayment schedule is over 4 years. The other element that you saw in that press release, which I think is the news, is that they've committed to fund Boumadine.
Exactly.
And that is that, so when people talk to us about Boumadine and, how big of a project it is, people would normally say, oh, yeah, but permitting is going to take like 3 to 5 years. And our answer, oh, yes, but we're already permitted. We have a mining permit. So, yeah, but then, putting the debt and doing the structuring of the debt on that is going to be complicated. Well, we now have the debt. So the debt's there. The equity is there. We have it.
Yeah.
So Boumadine, of course, there's a lot of work to be done, which David will mention. But Boumadine as a project is permitted. The financial structuring around it is identified. It's not done, but identified. And now it's a question of us completing PEA / pre-feasibility study and getting a line on our path to construction. So it's a very big press release this morning, though it didn't look like that because we just announced 25 million. But it's this refinancing of the project debt and Boumadine's financing kind of spoken for with EBRD.
And when you say it's spoken for, Benoit, I mean, how ironclad is that from EBRD side?
They have to see the feasibility study.
Yeah.
But you saw in their release, they've already invested 5 billion in Morocco. Morocco is a top priority country.
Yep.
They like what we do. They like our values, the social environment that we bring to mining. They like that. The 25 billion came with specific programs that they are funding.
Yep.
With women at work and all of that. So it's kind of spoken for. They want to do it. They like the area. They like the approach, but they need to see the PA and then the feasibility study, as we do. But very, very comfortable that there will be no surprises there.
And I mean, that's excellent. And as we see, I mean, we're seeing now Boumadine in numbers starting to showcase clearly that it's a tier 1 project, just in terms of the average grade, the size. It gets into the tier 1 category. So if people believe that, they shouldn't be overly concerned that this will be financed when it's time to finance. But again, the EBRD loan has better terms also than the alternative debt generally, I would suspect. So could you just briefly highlight that, Benoit, what you believe the delta would be with the average EBRD terms to what a counterparty could offer?
Very good question, Gorman. We do have the stats, because when we went out on the financing of Zgounder, we went out and we received many term sheets.
Yep.
And the term sheets had effective cost of capital between 16 and 22% when EBRD was at 10.
Yeah.
So there you go. So if you want to use some other sources of funds, you'll be between 16 and 22 on cost of capital. EBRD will still be around 10. And once you move out of project finance into long-term debt, EBRD will be more like around 6%.
Mm-hmm.
So no, you cannot beat that, but it's not available in every country. It's not available for every project. As you know, we have green energy at Zgounder.
Yep.
We will have green energy at Boumadine. We have our values, our corporate social responsibility projects. So all of that is part of what we bring. But you're right, the cost of capital on EBRD funding is 60% or less of competitive funding.
Which obviously is tremendous, because we're talking Boumadine here. And we'll get to sort of hopefully a hypothetical capex discussion depending on the size. And we'll see that in the PEA initially. But it's going to be a lot bigger than Zgounder in terms of financing. So it will impact the NAV significantly just if you actually get the EBRD, which seems to be likely. So that's excellent. But let's get over to Zgounder operationally, Benoit. Q1, 200 kilotons mined, 250 kilotons processed, 1.1 million ounces almost produced, 82% recovery, 91% mill availability, and cash cost just under $19 per ounce. So that's Q1. Q2, in those numbers, what are we trending? And what are the biggest sort of things for you to mention?
Well, so let's also call a spade a spade. Q1 is our first quarter of ramp up.
Yeah.
Like it's, we're looking at Q1 as if it was an ongoing quarter. It isn't. Commissioning was completed in December,
Mhm.
and Q1 was the first quarter of ramp up. So the numbers you gave are exact. And for Q2, things will improve. What will improve the most is on recoveries,
Yep.
because we did have problem with the oxygen plant, which was a default of manufacturing and right sizing and all of that. No problem. It's been fixed in May, and so the May recoveries are more in the mid 80s, and you'll see that the June are going to be even higher than that. So the big change for Q2 to Q1 is the recoveries. The mine processing is approaching 3,000 ton. We were at 2008 in Q1. We were doing extremely well. We passed nameplate capacity within about 3 weeks of ramp up. You saw this morning there was a Canadian company announcing that they've reached ramp up after 18 months of ramp up. They've reached nameplate capacity.
Yeah.
So we did that in like 3 weeks. So no, Q2 will be you'll see progress on every element. You'll see progress on production. On tonnage at the plant. The plant now is in June is at 3,000 ton a day, and it's increasing for Q3 and Q4. The mill availability is fantastic. It's in the high 90s.
Yep.
That's excellent. The recoveries is in the in the high 80s for Q2, but it will be close to 90 coming into Q3. And the only KPI that we have left, or KPI being key performance indicator, and where we are still working and not where we want it to be, is the dilution of the underground mine. The dilution of the open pit, that's easy because we have 3 meter spacing. We know what we have. It's then mine sequencing. Are we in the higher grade, lower grade? That's easy. The underground, we're still struggling with over dilution. The team was on site last week. There was a big meeting on Friday again. This is what needs our attention, and we're giving it our attention to bring the grade back up to where it needs to be, which is more like 180 gram per ton and not being at 150 or 155, which is a direct function of the dilution at the underground mine.
But you did announce you expanded the operation in the open pit to increase capacity significantly. And was that because there was some confusion in the market, I think, with that, because you had more success drilling in the open pits. You found more material there, which was positive. That partially could merit an increase in mining because you were sort of expanding the potential for the pit. But at the same time, it was also a tool to address the short-term troubles with the underground dilution. Can you explain sort of why? Was it both, or was it more the other? Just unpack what you mentioned.
To start is when we did the study, the open pit mining in Morocco was not something you would see. Mm-hmm. So the contractors were not ready. The employees were not ready. Our middle management was not ready because they'd never seen this. It's not something that they do in Morocco. It's all underground mining. So we did in our study put a small open pit phase. And as we processed and as we executed, we saw that the open pit was actually very good, very well managed, half the price per ton than the underground. So we said, okay, well, we have something. The drilling was showing an extension of the open pit structure that we could, attack. And at the same time, the underground, we had moved the objective of our team from 600 ton a day to 1,500 ton a day from the underground. And in doing that, obviously natural, they went away from selective mining to much more bulk mining. So in taking a structure that moves a little bit, instead of doing selective mining and be ready, they just went 0.5 meter on both sides. Let's take it all. We'll bring this out and we will make the tons, but we will lose on the grade.
Sure.
So we decided to stop that and say, no. Let's try to go back to more selective mining underground. And we will compensate with the open pit because the open pit is performing very, very well. So now the open pit's performing, I'm going to give you round numbers, between 1,500 and 2,000 ton a day. And the underground is steadily performing at 1,000 ton a day. So we are getting the feed, but we still need to improve on the underground dilution. We do. The open pit is what it is. The drilling is there. It's precise. You that's much easier. But the underground, we're still working on that. And look, it's improving. It needs to improve even more.
Could you sort of detail or expand upon what work or remedies you're putting into improving the dilution in the underground operation?
Well, you reduce the tonnage.
Yeah.
So instead of asking them for 1,500 ton a day, we brought this back to 800 ton a day. Now they're doing 1,000, but we brought it back down.
Yeah.
And we also increased the amount of drilling. So and the spacing of the drilling, so that, a little bit like you do in open pit, we're doing it in underground. And we're saying, like, before you take it out, let's do some definition drilling to make sure that we know where the structure is. Also, better geological interpretation, better communication between planning and execution. So all of that, when you're, it's like a restaurant when you're doing 200 meals a day, and now you have to do 2,000 meals a day. The people who prepared the cold plates and the warm plates and the dessert, they all have to work together. Otherwise, you could have a cold meat and warm potatoes, and that doesn't work. So that's exactly what we're doing. Is because we've increased tonnage, because we've increased the demand, because the plant is eating up 3,000 ton a day, which we have because we have the rum pad. We just need to be a bit more precise. It's absolutely normal. Yeah, I was talking to people at Ivanhoe Mines who were telling me in the DRC when they started the copper mine, it's absolutely normal that you're adjusting your teams to be as a ramp up. That's why it's called a ramp up.
Exactly. I mean, it's calibration, and as you mentioned, takes some time, and you've performed well so far, for sure. But you're also, everyone has high expectations because you're a team with a very good track record. So everyone expects Aya to perform well, and you are. But my question is then, Benoit, sort of in concrete terms, when do you think the underground operation can get back to whatever is painted up in most of the financial people's models, and including in the last study? When do you think you'll get there? Is that Q3 or Q4, or when do you think?
The sooner the better, but I think it's probably Q4.
Okay.
But also there's mine sequencing, because this project, as you know, is not homogeneous grade, and you've got these fractures, and you've got to follow the grade. So it's really a question of information and using that information for mining. So if and I know they are working very hard at coming into the very high grade zones that we do have. Yeah. And once you're into the very high grade zone, then this is it's almost theoretical, because you are in a beautiful zone where you take a lot of material out. But look, we want to have a grade in Q4 that's approaching what we believe it should be, between 170 and 190, and on a steady basis, net of dilution.
Right, and you'll have the high recoveries. So at that point, you're starting to get to the 1.5 or even over 1.5 million ounces run rate. So that's excellent. Per quarter, that is. So 6 million plus full year in 26. And then I wanted to ask as well. I mean, would this entail a significant increase in sustaining capital expenditures this year? This underground mining calibration, or is it modest?
No, it's very. The sustaining capex this year is around 7 million on mine development, and a couple of millions on expenses. So it's you're looking at $10 million maximum.
Okay, good. All right. David has patiently waited, but now it's time for Zgounder regional and Zgounder exploration. So if we start near mine, David, just generally what's been happening near mine at Zgounder, if you just detail that, and then let's just speak on regional as well.
Yeah, I can share. So we have a map. All right. So for the beginning of the year, we were mostly drilling underground at Zgounder and very proximal. While we were finishing the detail mapping and the grab sampling and collecting more data both on Tupshkal and the Far East. So this program is basically done. We're awaiting results. So that's progressing very well as the underground proximal drilling. So the finishing of the definition drilling all the way down to the granite and all the way to the west to the western fault. So this is having good results. We've published them on a regular basis since the beginning of the year. And we're just about to release a new update very soon. So again, the typical high-grade zones going towards the granite contact, and also an increase in the resource towards the west coming. But what's even more exciting, at least for us at Exploration, is what came out from the detail mapping and the grab sampling, the stream sediments. It's all the Far East sectors that we are just about to start drilling. The drill rig was mobilized there. And should start drilling sometimes today, tomorrow morning, for the first initial 2,000 meter program. So basically, we have 4 targets right now that we're going to test drills. We had some very great grabs of copper and silver. So we have 2 targets in the northern part of this license. We also had some very nice silver anomalies, so we're going to test this one. And probably the one that attracts us the most right now is the southern anomaly. We're talking for now mostly gold values, so ranging from 0.6 all the way to 10 grams per ton. But what strikes us in this group of permit is the highest alteration that we've seen on the full regional package. So we know there's lots of fluids that have passed over there. We have nice geology. We have major structures. We have lots of sniffs, both in copper, silver, and gold. So we are having an initial program that will start that should go for about a month and a half. So probably mid-August we should be done. And then the results. But that is what keeps us working at night and excites us the most right now at Zgounder Regional. And we're really happy that it's finally starting.
So can I ask this southwestern target, since that's the one you're going to drill test, what's the believed nature of that mineralization? 2,000 meters?
It's too early. It's too early to tell. What we can tell is that we have a mix of sediments with felsic intrusive. Mm-hmm. The intrusive, the rhyolite felsic intrusive are very, very highly alterated with sericites, clay alteration. There's gold both in the host rocks and the dikes. So there's lots of smoke. It's a large corridor of about 50 to 60 meter in thickness. And we haven't started drilling it yet, but that's one of the target where we could expect something significant. Just the amount of fluid and the presence of gold in many, many grab samples is what's attracting us. Towards the north, it's more typical of Zgounder style. So east-west structures, north-south structures with lots of silver, a bit of copper here and there. But the south would be a totally new style of mineralization for the region. And hopefully that's just a preliminary program, and we'll keep on drilling for a while in the months to come.
And the initial design of the program, 2,000 meters you've allocated, but how many holes have you actually designed so far to?
It's about 21 holes for a start.
Okay.
We'll closely look at the geology, and we've got the place. We're at 33% of our full program at Zgounder completed. We've got some flexibility, so if we see something that we like, both in alteration, mineralization, visually, we can always fast track the assays and add some more meterage there. So we've got the flexibility. It's 20 kilometers away, straight line from the mine. So if there's any significant hit, believe me, we won't stop drilling there for the near future. The main objective, and we said it many times, but it's in the 18 to 24 months time frame to find at least one satellite deposit to Zgounder, to help the flexibility of the operation and or look into an expansion.
But so 21 holes design, is that like a couple of fences along the main structure you're seeing, and then it looks to be a shallow target then, is what you think?
Exactly. Well, we're not looking for, right now, we're not in the stage of looking at 600 meter or 800 meter below surface. It's a brand new permit. Nothing had been done there before. So we just completed the mapping, the grab sampling, the geochemistry, hyperspectral geophysics. We delineate some targets, and we'll go do 2 to 3 fans on each of the 4 targets. Let's have a look what the geology is. Let's have a closer look and XRF the alteration halo. Let's understand what's there. Let's see what the values are bringing back, and we'll plan a second phase for later on, either right after this one or a bit later during the year. So we're very excited, but as long as we don't drill it, grab sampling won't make a bit. So we need to drill it. We need to see what there is. We're starting that. We're very excited, and we'll see what comes out of it.
And you're doing core drilling, right? Not RC here, because you want the...
We'll start a first phase of RC, and we have the possibility. We have available drill rigs at Zgounder that we could transform it in diamond drilling at any time. The advantage of RC, it's very mountainous region. Water might be an access. Water access might be some issues. So everything that we can do RC is a plus. So we'll start with RC, but as soon as we see something interesting, believe me, the diamond drill will come right behind it. There's lots of information you can get from RC. So I do believe RC drilling still brings us lots of information. And until we have significant mineralization, I don't see the plus of going straight away for diamond drilling.
Okay.
And scout drilling. It's the first time that this property there in the eastern of Zgounder is going to be drilled. So let's see what we have for alteration and mineralization.
And what's accessibility like to this part of the tenement and distance to Zgounder mill?
The distance is about 20-25 kilometers, depending where you are on this group of permit. It's the same type of topography as Zgounder. So yeah, it took some time to build a road access to the drill pad and the drill pad. We are there now. I think we have just 4 pads left to complete. So we'll start from the north and move towards the south. But again, the means we have for access at exploration is not the same as production. So right now we're doing some small access for pickup and drill rigs. If needed, bigger access, then Raf and his team will gladly jump in to make those access.
Okay, Benoit and David, sort of the Zgounder resource currently. We've had this discussion a couple of times, potentially updating the resource at Zgounder, and it struck me as well, it's not necessarily possible to do, but this expansion, reminder, Benoit, it's like $5 million US to increase the throughput. Is it by 500 tons per day to 3,500, or is it 1,000 tons per day up to 4,000 tons per day total? Just a reminder about that hypothetical expansion.
Yeah, well, currently we're running at 3,000 ton per day.
Yeah.
And we know that just with a few little items, we can add about 200 ton per day twice. So going to 3,400. So we know that that's readily available with almost no capex.
Yeah.
Now to increase that above 4,000 to 4,500, yes, that would be probably a capex of around $5 million, which would be leaching tanks. And we're not there yet. We haven't yet done the work to go there because we need additional ore. We need an additional source of mining. Mm-hmm. And that could be it, the Far East or any of the other targets that we have. But currently we're going to take it to 3,400, 3,500 with just small adjustments.
And what's the time plan on that? And when do you think you'll actually get? Is that will you ramp up to that level towards the end of this year or next year?
Before the end of this year.
Okay. So basically, we can expect, at least in Q3, Q4, grade being lower than what was planned, but you will compensate with higher throughput, essentially, and get
Precisely.
Okay.
Yeah.
And when you produce the cash cost guidance for the entire year, you didn't really have that in mind, did you? Or as an input in that guidance?
No, we did not. We knew we could expand it. We did not. But we did not have either the dilution of the underground mine. Let's be honest.
Yeah.
So we're compensating for an additional dilution that we did not expect, and which we're working on to fix. And we are also increasing throughput because those are just very small things to change.
Yeah.
Pumps and very small things to change to improve the total throughput.
So it's basically an acceleration and increase of open pit sort of output, more or less, in the interim here. Would you expect into next year then, when you actually sort of get the underground in order? I don't want to say in order, but when it gets to where it's supposed to be, do you think you can have significantly higher production in terms of output in silver into 26 than, say, 6 million ounces, since you're at a higher throughput level? Absolutely.
Well, that's right. No, at 6 million, that will be 500,000 per month. Currently, with what we see, this is where we're going to be currently.
Okay. So okay. So currently, yes, but if you increase the throughput and actually feed the mill with 3,400 tons per day throughout 26 consistently, if that's the case, would you not then expect the output of silver production to be higher than 6 million ounces?
Hypothetically, on paper, yes.
Yeah.
But the reality is, with the dilution, with the recovery, it's mining. Our goal is to reach 6 million ounces next year. That's our goal. Okay. Obviously, what we would like is for David's team to find another structure, and that would then allow us to kick in a real increase in throughput, because we'd have a second source of ore, which would be fantastic. So, but that will come in, over the next few years.
Yeah, but I mean, it is a huge. Essentially, you're saying you have the optionality, because I mean, it makes any discovery of a new deposit or new ounces in the region of Zgounder 10 times more valuable than anywhere else, because you can spend $5 to $10 million and you can actually add over 1,000 tons per day in capacity. It's a very big deal. The return.
Totally. Yep. Yeah. And the infrastructure is there, and the camp, and the water, and the tailings dam. So it's all there. So you're absolutely right. When you find a satellite pit or another structure, you're adding on value immediately to the company, because it's super accretive. It reduces your cash cost. It increases your revenue. It's very, very accretive, and that's why we're focusing on Zgounder Regional.
Okay, fingers crossed, and we should see the initial results there, I guess, would it be September then, David? Mid-September or late September?
Yeah, mid-September, I would say.
And again,
especially if we have some nice visible mineralization and ore alteration, will for sure rush the results.
Yeah.
So you could expect like beginning of September, mid-September to have an update there.
And you guys have the core rigs, obviously, drilling underground at Zgounder, and core rigs available. So if you hit something...
Exactly. Right now at exploration, we have 2 rigs underground, 1 rig at surface to finish the proximal on the deposit. That could be reallocated anytime. We have plenty of drill rigs running at Boumadine that could be reallocated there at any time. And the contractors still have drill rigs elsewhere. So mobilizing a drill rig could be very quick, like we're talking few days, not a matter of few months.
Okay, I think we'll wrap there on Zgounder and once again get to Boumadine. So if we start, David, on the updated resource, can you just sort of highlight first where these ounces were mainly added? We saw almost an increase of 100 million silver equivalent ounces since the last resource update, which is excellent, obviously.
Yeah. So the last update, the first update basically was taking everything that is in white. So we have about 4.2 kilometers of Boumadine main trend, and we had a small amount of Tizi here and a tiny amount of Imaririn here to make the initial 2023 resource calculation. So what was added last year is all the northern part of Boumadine. So we extended to and the southern part. So we extended from 4.2 to 5.4 kilometers. Tizi was about 250. We are now at 2 kilometers. And Imaririn was a little bit pushed last year. This year, with the drilling we're doing, we keep on pushing Tizi both to the north and the south. We're pushing Imaririn a lot, and we'll try to keep on pushing Boumadine towards the south. So that's the plan for the resource.
And again, a quick reminder: how many meters were actually drilled between the two updates, the two resource?
The first updates was about 94,000 meters, if I remember correctly. The second one was at almost 140, so it was an addition of about 60,000 meters on the structure, 50,000 meters on the structure.
Yeah, and the total resource increase was approximately 100 million.
Exactly,
equivalent.
Close to 100, a little bit more than 100 million, so 102 million.
So I'm sure you know the figures here, and I guess I could do it in the head, but it's a pretty good return on the drilling meters, because 120 kms of drilling here is about 30 million US, right, or something like this.
A little bit less, yeah.
Yeah, and you have 100 million ounces of silver equivalent. That's times 30. I guess you can go conservatively then and divide that by 30 million US.
So, and we hope to do the same thing this year, and even better the year after. If we can unlock some of the regional potential, then we can speed up also the amount of ounces added to the mill.
Actually, what is that return? That's 30 million US. That's 3 billion US in situ value. But so that's 100 to 1 return on investment in situ, I guess. Which is
life could be worse.
Yeah, which is pretty respectable. I'll give it that to you.
Well, it's this type of project, Boumadine. We're talking a lot about it, and although it makes now close to 3 years we're drilling it, all the geologists, if you come on site, all the geologists are still super excited. The company is super excited, and as you notice in the last press release, and in the latest press release, we keep on consolidating the ground, and we start working outside of the mining license, and we see mineralization signs everywhere, basically. So it's a very, very, very interesting project. Where's the region? So we just announced recently that we've added 4 new licenses. We added 4 other one beginning of end of January. So we're at 8 new license or permits this year. We also added an authorization of exploration. So we have basically 15 kilometers square of mining license and permitting of this so far. And we have the exclusivity or the priority on an extra 600 square kilometer. And we're not done yet. We're in advanced discussion with many other owners. And we expect to keep on growing this portfolio in the coming months. And what's even more interesting is all the geology that has been done, all the work. Of course, we have the geophysics, but it's the ground that are returning. For example, in the western structure that we are just drilling currently, we have lots of silver value, lots of copper value, up to 15%. So new type of mineralization, not the same one as Boumadine that you see right there. All the southern sectors, we have 24 kilometers of structure that comes here that is full with grabs right at the contact between the Cambrian rocks and the Ordovician, 70 to 80 meter wide deformation zone with lots of veining. and fluid circulation. We have a huge amount of silver anomaly, lead anomaly, copper anomalies, sphalerite with zinc anomalies. So that is very attractive. We are completing the mapping and the grab sampling over there. We're already starting building the road access to go drill. So this year, the fun part is to start touching lots of the regional target. And at the same time, as we get ready to tackle them with drilling, we have the regional team that keep on doing mapping, prospectings, and they keep on finding new and new structures. So we're basically having targets for the next 8 to 10 years. So we are prioritizing them and we're testing them as we go. But already this year, the orange doesn't show too much. I'll try the blue. So we've tested this one year. We are awaiting results. Last year, we tackled this one. We have some anomalies, so we'll push it aside for now, but we know that deep, there's a rooted system. We see alteration in metal anomalies, so at one point we'll come back. We did hit a structure right there, so we need to follow up on it. And there's plenty of other structures that we will want eventually to try. This one is having nice grabs at surface, nice context. There's a silver structure here that we start drilling. We are waiting the results. We have all the south to tackle, and that's not without talking about, okay, we can still grow Tizi, we can still grow Imaririn, and we can still grow Boumadine. There's the full link here that we have to test where we have the permits. So we have plenty of room to grow both the Boumadine system and all the different type of mineralization that we can find in this district. So the idea is basically to control everything from a 25, 30 kilometer radius from the future mine mill. And we're very going at it. There's a regional team full time, and we've got about 25 geologists doing the logging, the drilling ongoing. We've completed a little bit over 70,000 meters already this year. So we're well in position to complete the program, the planned program of 100,000 to 140,000 meters of drilling. But even more importantly, if we hit something significant on any of the regional targets, we are in a position to say, okay, we want to drill an extra 20 on that structure already this year. So that was the aim of going full front loaded at the beginning of the year, having some months at 15 and 20,000 meters per month to make sure that we would reach our program, but also getting the flexibility of adding if needed.
I guess my sort of comment is it's almost dizzying with all of the all of the varying ideas that you have here. But I think my sort of takeaway is that when you have secured all of this ground, when it comes time for Benoit and for everyone to finally sell this entire thing to one of the big boys, having done this work and having secured all of this land becomes immensely valuable, because then you can actually sort of know that you'll be able to have a sort of an operation that will exist for decades and decades and decades and decades, because you have the ground there and you've done the work to showcase that you have the line of sight to, way beyond 5 million ounces of gold even. So it's great. Before I ask about the strategy now, so acceleration and what that actually entails in timeline, the drilled targets we haven't spoken about before, David, is the one to the west there you showcase with the blue, and the one to the northeast. So can you just detail when we're expecting to see assays from those targets and a bit more information, how much you drilled, what you expect to see there, and so on?
I would say September. The drill program was just, it's still ongoing. Already the last press release or the one before, I cannot remember, we did release the gram sampling that we've done over there and delineate the targets. We acquired this license here, so we start the mapping there. So you can see now that the structure is basically 10 kilometers. We've added some extra. So we'll work that in parallel, but already in September, you should have an update on what we hit there and what's coming for the continuation of this target. This one, we should have the results sometimes this summer, so probably also an update in September as well. While the south, we are pushing hard for the access and the logistics over there. Probably it will start drilling only in September.
Okay.
Just after we finish with the 50 degrees temperature, we will move there with the full fleet of drill to go test drill this structure.
Yeah. So I mean, the acceleration in concrete terms, how many rigs will you have now? Because it's not like you're going to start accelerating in the next calendar year. You're going to accelerate now, I presume. So what does that actually entail? How much more drilling do you get done before the year end with this in mind? Or is it contingent on waiting, seeing this idea?
For sure, minimum, I will reach the 140,000 meters. Like that's a clear minimum.
Yeah.
And then like later in the summer, we will already have a little bit of results and the plan of what we want to achieve. So we'll sit with Benoit and the management team and say, okay, are we going for an extension or we keep it like that and we drill more aggressively next year? We'll sit. We have what Benoit wanted to make sure with the 140 million and what I wanted to make sure with the fast pace of drilling at the start of the year is that we had the flexibility of taking this decision.
Yeah.
I didn't want the program and the logistic to dictate what we have to do. So now we are in a position to do it.
And you said you've drilled 100,000 meters already this year, right?
We've done a little bit over 70,000. But we slowed down the pace in the last 2 months.
Right.
Because
so you would have been 100K.
We reached 20,000 meters per month in March and April. So we know we can. The drill rigs are not running fully right now, but they're still all on site and just on a finger or a phone call away to say, okay, we start back drilling with 11 or 12 rigs if needed.
So, I mean, you had an update in May, a big update on Boumadine releasing assays. How many meters are outstanding currently, you think? I mean, total? Is it like 30,000 or?
Assays, at the worst period, so about 3-4 weeks ago, we went to 42,000 samples behind. Now the FK Lab has completed their expansion. ALS is working on their lab extension as well. So this is resorbing and we hope that by end of July, beginning of August, we're back in a turnaround time of about 2 to 3 weeks.
Yeah.
So right now, my lagging must be back towards 28,000 samples. So we are in the good direction, and both labs are taking all the steps necessary to bring that back to a normal level. So basically, we were the collateral damage of the increase in production sampling.
Yeah.
Of course, they had priority on me, so that's what put my samples behind. But then we are taking measure to make sure that although we will keep on producing all those production samples, we will also get assays for the regional and the exploration.
So what I was asking is broad-based question. You released X amount of meters of drilling in that update, but you've drilled totally 70,000 meters this year. So how many meters outstanding has not been released yet? Ballpark, I guess.
Well, the last update was at 70, and that was a few weeks ago.
Yeah.
We'll make another update probably towards the beginning of July. But since then, probably we added an extra 5,000 meters.
Okay. So, and that will be mainly some of these new targets that you showcased here then?
It's a mix. It's a mix. We have both rigs, both on the northern end of the deposit and some on the regional. So we want to make sure we advance both the extension of Boumadine resource with the aim of bringing it to 6 million on a very near future and probably more than next year. And also finding something on the regional front to have a good idea, a good grasp of how many more ounces we can bring to the table. So what type of mill size does RAF needs to think about? And also like is there new types of mineralization? Like what we have at the west is clearly not Boumadine style mineralization. So we need also to take time to consider that. The copper component, but also different metallurgy.
So Benoit, in terms of the development timeline, you want to sort of beeline, go full force speed towards building this thing. What's your sort of thinking on that? PEA, when do you do a PFS? Do you go straight to feasibility studies? So like I have an army of infill drill rigs. What's your current level thinking on it?
So it's a very unique project, as you can see.
Yeah,
it's the tier 1 asset. They're very rare in the world. We are still by ourselves in that part of Morocco. So we are doing a first stage PEA based on the main zone, which is the Boumadine zone that we know, which is at 5.2 million ounces of gold equivalent, or 450. But that was as of last year. So it's going to even grow probably quite a bit for the PEA once we have it ready by the end of this year. But we are one discovery away from saying, oh, and by the way, let's rethink the PEA, because David has identified another structure to the west, to the east, to the north. So the PEA is to show the world that on, what is it, 2-3% of the ground, on a 5.4 kilometer structure down to 300 meters, we already have 5 or 6 million ounces of gold equivalent, or 550 million ounces of silver. So that's on the main zone that we know, and nothing else to the east, to the west, to the south. When we look at the south, and David says that there's a structure which is, a stockwork 75, 80 meter thick with copper, but silver grade and all that, that could change the whole mathematics of the PA or the approach. But we will focus on showing you that it is already a tier 1 world-class asset with the first structure and the little parallel structure to the main Boumadine project. So, and that's why we raised the money, because as David says, he'll do 140, but we know David and I have been working together now for 15 years. We know we start and then we go, okay, and this is new, let's do this, and let's add 20 or 30 or 40,000. My dream would be that we drill 200,000 meters this year. That would be the dream, because that means we are adding drilling information on other structures. And that is what I think this project is all about. And strategically, everybody's looking at this. Every time we go into a mining, event, and we present to to others and to other companies, everybody comes out saying, "Wow, this is the best project in the industry right now," because of tonnage, because of grade, because of the country, because of the infrastructure, the power that's available, manpower that's available, all of that. Make it extremely rare. And look at the geology. The geology is absolutely unbelievable. And, as David says, we have a big team, and we will take it to PEA. And yes, that PEA will take after to feasibility study. And yes, we will take it to production, but knowing that at all time, we may have to step out a little bit to add tonnage, to say we're going to do it differently or do this or do that. Those are only good problems to have.
Yeah. So I guess one specific follow-up question I have, Benoit, you're doing the PEA, but the question is, are you going to provide an incrementally updated resource again, since the one you released in February with a cutoff from the cutoff was, I think November or December last year for that drilling. So you've drilled 70,000 meters since then, and you will probably be able to drill another 40,000 meters. Do you have a new cutoff and update the resource incrementally into the PEA or not?
That's a very good question. We would like to, but that then pushes the PEA further away. So we may do it in steps, saying based on what we had in February 2025, which was based on last year's cutoff. here's the first PEA. These are the first numbers, which are going to be mind-boggling. And to that, we can add another 700,000 ounces of gold, or what's almost 100 million ounces of silver. And in putting that into the model, that's what we're going to see, which is going to be another big kick in the NAV of the project. But even currently, with the numbers we have, this is a multi-billion-dollar project currently.
Yeah, I mean, it's so, the permutations are so fascinating to consider, because I mean, you can just continue to go all out defining scale, and then it probably becomes something where, if it's like truly tremendous, you say you have a 10 million ounce resource, you work yourself up there, you maybe do a Lundin move where you partner with BHP and do a 50-50 or something like this. You invite them to come in, they do their share of the capex. I mean, or you can build the initial mine and then say, okay, this is Aya owns it. We're gonna keep this. We're gonna produce 300,000 gold equivalent ounces per year, and we're gonna expand it down the road. So it's just like, which path do you go down? And I guess you don't really know exactly at this point in time.
Currently, the path you just described is what we're going to do. We're going to do a smaller project, much bigger than Zgounder, but smaller in its global size.
Yeah.
And we will generate with that 300-400 million of EBITDA per year. That's a small project. But again, it's a function of geology. If the geology is coming through to the west or to the south, it will change everything, and we will keep this in mind. And we understand Morocco well. We know that building mines there is a lot less expensive than in the Andes at 5,000 meters height, where the capex are in the billions of dollars. It won't be the case here. We're only at 1,000 meter with infrastructure and with very good subcontractors. So look, we will keep developing this. It's a unique asset. We know this, and the people around us and our friends in the industry, they all know this, and they're watching this because they don't come around often in our industry. And look, I hope David drills 200,000 meters, and that's why we raise the money, and hopefully even more. It's just a matter of understanding, getting the geology done, knowing where to go and how to approach it. And look, we all know that we're not limited now by the liquidity or the cash. We're now limited by the geological interpretation to decide how fast we want to go.
So, David, if I just direct a question at you, Benoit can step in if you want to contribute as well. So if you decide to update a resource and with the goal of adding, maybe 50 to 100 million silver equivalent ounces to the resource additionally from the last update, how long would that take? I mean, would that push the PEA and that updated resource out to early next year, or have you made that decision sort of finally that you will do that, or that you won't do that yet, or is that sort of in the air, sort of a bit of 50-50 at this point in time?
David, you want to?
Well, we know the PEA is going. So in order to have the PEA ready, there's few answers that the metallurgical team and the engineers are working right now. This is progressing well. Sometimes this year there will be an update on that. So yeah, there could be a PEA coming just on the last resource update that we've published. Which doesn't change my timeline. I keep on drilling, and we'll close the database at one point, and we'll do a resource update on our side as well. So we can work those things in parallel. They have enough right now that if they want to do a P&A, they can, and they're working in that direction. And we keep on drilling, and we keep on increasing. So expect some news relatively shortly, but exactly when, that's up to...
Gorm, with the current resource level, we will build a mine because we know, us here, we know that number is wrong. Yeah, it's much bigger. We know that. So we're going to build the PEA with the throughput that makes sense. And the current resource are going to give us 10, 12-year mine life. And the updated resource will give us 15-year mine life or 16 or more. So at the end, when you come up with your resource update, of course, your NAV of your project will go up. But everybody in their right mind will know that. They will know that we are saying it's a 12-year mine life, but this is not going to be a 12-year mine life. It'll be probably a 20-year mine life and more and more.
Yeah.
So it's really a question of, do we want to put it out right now? And the answer is yes, because we need to know. We need to know ourselves, and we need to show the street what kind of a project it is, and is it economical? And some people had questioned with metallurgy and all that. That's all behind us, and we know that we do get extremely acceptable recoveries and very good value per ton of ore and all of that. Now we're working on the mining method. It's going to be half open pit, half underground. So all those chapters are being looked at in the PA, and that's a separate team. David's team is focusing on resource, new structures, new geological interpretation, as the development team is working on the PA. So of course we're all talking, but we're going to show the street that the first structure is already a multi-billion-dollar project, and I'm not talking capex here. I'm talking net asset value, and after that, well, it'll be it'll be for us to find. I'm very like David, positive about the southern structure. It's 21 kilometer long. We're seeing artisanal mines that were there from the past, mining silver and lead and zinc. So look, this is a very unique district. You know that Boumadine in local language means the father of all deposits.
Yeah, well, it will turn out to be a fitting name, hopefully. Then, so it's. But Benoit, specifically, I mean, and I agree. It's better just to put out the initial PEA to. I mean, I think part of it is to smash those shorts. That will be a huge, if you haven't done it before, just based on operational improvements at Zgounder. So just putting that out, showcasing what the floor is, and then the story will paint itself, because people are not that dumb. When they will see the updated resource, they can extrapolate in the model and so on and adjust. Quickly, what on the metallurgical work and so on, can you just refresh? Because there are some skeptics about this. Always when there's refractory ore, people are always perhaps irrationally skeptic. But in terms of how that will reflect on capex, what do you think people can ballpark have in mind? Is this $500 million, 800 million? Is that the range we're looking at, capex total?
Well, refractory ore is a problem when you do not have the tons. That's what it's a problem. But once you have the tonnage, look, Nevada is refractory ore.
Yeah.
Turkey is refractory ore. I mean, there are tons of projects that are refractory ore, but they have the tonnage. Here, we have tonnage and we have grade. So it's not a problem. It's a matter of how do we want to treat it. So we're going to do it in two steps. Step one, is producing a concentrate, selling the concentrate to Asia and Europe, and that we are already in discussion with off-takers on step one. So that's a normal flotation plant with a higher throughput than Zgounder, obviously 4 times higher, but it's not complicated, and those are being built all the time. And step two will be, okay, well, as we're selling the concentrate to Europe and Asia, we're leaving a little bit of the money on the table because it hasn't been processed. What's the cost of processing that? Which is not all of the product, because 50% of the concentrate is not refractory. It's a lead. It's not refractory. It's like it sells easily. And then we have to decide what we want to do with the pyrite concentrate. We want to treat it ourselves. We want to keep sending it to Asia. There are discussions right now in Morocco about a smelter being built for copper, because Managem has a beautiful copper mine that's coming into production. And there's a discussion where, there is a discussion happening as we speak on building a smelter in Morocco. If they do, what they need in that smelter is the pyrite that we produce at Boumadine to feed the smelter. So that's one discussion. The other discussion for us will be, okay, but then do we do a joint venture with another party and build a roaster? So, but this is like 5 years away. And yes, that will double the CapEx that we do and that we will have in the PA. The PA will have a CapEx for phase 1 or A and phase 2, including a roaster, not a smelter, but a roaster. But that will come later. But you will see that even under phase 1, this project makes a lot of money and is extremely profitable.
Okay, just to break that down a little bit. So in phase 1, would you expect, how much of the metals would you expect to recover? Would it be significantly less then, or how?
It will be significant. I can't give you the numbers right now because it's under discussion. So but it's this will make it that you will be selling your concentrate, and you can expect a net margin of about 50%.
Okay, right. And then if you were to build a roaster on site, which would be a big capex build, you go up to whatever it would be, like 80% or 90%.
Well, I'm not talking about the recoveries. I'm talking about the net profit of the project. But yes, if you're looking at a roaster, absolutely, you'll bring your recoveries up to 75, let's say 78% of the metal. Absolutely.
Yeah, right. Excellent. So in the PEA, you'll outline those 2 steps. It would be a phased delineation. Would it be like a couple of years time frame between the 2?
That's right.
Structures? Right.
Yeah, and then if they do build a smelter in Morocco, then end of the discussion for us will be a feed to that smelter, and that's it. So there are too many moving parts right now, but we will accelerate the construction of phase A because it will double our silver production. It will bring gold production, lead and zinc. It will make our revenue go up like 300-400%. So we need to get to that as quickly as possible, which will only come from the main zone. All these other zones that are at Boumadine, we have not yet taken them into account.
And so Benoit, in your mind's eye, then beyond the PEA, how many years do you think it takes before you start building this thing? Is it 2-3 years after the PEA, or what do you have in mind?
What I have in mind is maybe not what the technical team has in mind, but that's okay. That's normal. David's laughing. He knows. But I think I would like that we could start the construction of this in 2 years from now, not in starting, but in the third year. So 26, 27, hopefully we could start construction end of 27, beginning of 28.
Well, I mean, that means... how many infill drill rigs would you have to have in H2 26? Going to be crazy, but
impressive. Yeah. I think David said we need to drill about 300,000 meters.
Yeah, it's more 4.
4.
So 400,000 meters to get to feasibility level resource confidence. Is that the calculation?
Yeah, to infill the main structure.
The main structure.
Now. But again, at one point when we have enough confidence, we don't need to infill the full 6 million ounces.
Yeah.
We can go on step. Like we infill the first part and then we keep on infilling with the years that goes by.
But in your mind then, David, do you think that's executable on Benoit's fancy timeline here? If you get
Yeah, I think so. And as I mentioned, we don't need to infill everything.
No.
We start where we need to start mining, like the open pits in some place underground, and we keep on infilling for the next 3-4 years afterward.
Basically enough to get EBRD happy to give you the debt, and then the rest is history. So that's good. Looking forward to that. But more specifically, Benoit, I guess the PEA, is that late Q3 or is it Q4? What do you think? What's the actual...
No, definitely Q4. Definitely early November, end of October, early November, if everything goes well. That's the timeline for the PEA based on what we see right now. And
then just a few more questions before we wrap up here. Again, David, I mean, you mentioned the southern contact or the southern target, which Benoit also was very excited about. What's the timeline on starting to test that with drilling?
As I mentioned, right now we are already building the road access and the drill pads. We identified a part of the structure that we want to start drilling.
Yeah.
The other parts as we go on, we will have, but already in September, we should be in position to start drilling. So as mentioned earlier, as soon as the big heat, the 50 degrees are gone, September, we should be moving there with part of the team and a few rigs to start drilling. And depending on the results and what the regional geology team finds, we can be there drilling for a while.
And then just again to refresh, David, I mean, why do you think it's a really excellent target right now? You have rock chip samples, you have soils, you have maps.
We've got a huge geophysical anomaly. We've got a major contact between two eras geologically. There's a rheological contrast, so we have lots of fracturation, deformation towards this contact. Lots of copper, lots of lead, lots of zinc, silver anomalies as well. As Benoit mentioned, there's few artisanal or semi-industrial mines on some of those structures exploiting lead. They're not touching the silver, but we know there's silver in that lead concentrate. Everything is there, all the elements. So the sniffs, we've got everything, and we've got the structure for 24 kilometers. So there's lots of juice, lots of structures, lots of mineralization. So there's nothing not to like about it.
All right, and then finally, Benoit, just checking in on MX2, which I think was a very nice bonus for shareholders of via unlocking value in the broader portfolio. So, what's the status with MX2? What can we expect to see there if you're up to speed on it?
No, MX2, look, they're putting in more assets. They're buying permits around the existing permits that they've acquired from us. They are building a large land position, which is fine because before they start drilling and they start doing a lot of work, they are in areas that are a bit busier than we are. We are further away at Zgounder and at Boumadine. They are more at Amisbis and at Zgounder. That's kind of closer to Marrakech. So there's more people. They're a bit more artisanal mining in that part. So they're putting the assets together, which is what they need to do. They've increased the footprint already quite a lot. And it's extremely pleased with this transaction, the way it's going. There are, and they understand they have a good balance sheet with $16 million now, probably down to 14, but very strong balance sheet, access to money, good permits. In a great jurisdiction. Again, they now realize, both Rick, Adam, and the board, how amazing Morocco is when you compare that to the rest of the world. It is absolutely the best place to be, and they're very happy. So they're growing their portfolio. They're doing geology. They're doing regional work. You're right. It's the best play to get some value for Amismis, for Boumadine. David's working closely with their team, our team. We're helping them getting what they want. And, we do own 42% of this company. And it's so for our shareholders, this is going to be a very good transaction. Very good.
And Benoit, I mean, what is IA's strategy? Because spinning out the shares is not good to do sort of close to or before you go public, I would say. Is that something you're considering, or just keep the IA position? We
will keep the shares, and we have an agreement with them that we're going to keep the share for at least 3 years so that they can go public. And both Rick, Aya, and Adam were on the same restriction list. So we nobody's coming out. Like, we're building a real company, and we are, restricted to sell, and that's how we want it to be. And at one point, Aya should distribute this to its shareholders, and that will be a beautiful bonus of another company focused mainly on gold in Morocco. And Aya will be, of course, it will have some gold, but absolutely a silver company developing in Morocco. And we do stay in Morocco. We've worked around the world, and for the time being, I think it's the greatest place in the world to work on permitting, infrastructure, people, and the food's not bad.
And the go public itself, is that like a 6-month thing, or when do you think it will occur?
Well, that's a board decision. There's no rush to do it, but yeah, I would say it's hopefully this year before year end. It's a board decision. They are putting the assets together. The market needs to be there. The gold price is there. So look, at the board, we will look at when we want to do it. In the meantime, it's easier to manage. It's less expensive being private, not public. And Aya is very happy with its 42% ownership.
And Benoit, as I always like to ask you when we catch up like this, I mean, we're seeing that Morocco is sort of industrializing. New chemical industries are coming in. A lot of industrialization is sort of nearshoring to Europe is happening, right? But in the mining industry specifically, what are the key or any notable events we should know about? Any new entrants, big companies coming in and trying to do something real on the ground, or is it still very much Aya owns or dominates the scene?
There's 3 companies in Morocco. There's OCP, but that's a phosphate, so that's has its own economic environment. Yeah. There's Managem, which are very good. They're building a beautiful mine right now, copper mine, and they have all their other assets. So and they're doing very well. But they have a lot of ground, and they're doing some work all over Morocco, and they're there. And there's us. We're like the number 3 player in country. We are the only publicly traded company on a stock exchange outside of Morocco. Managem is traded, but in Morocco. And we have a first mover advantage. We do have a lot of ground and are buying a lot of ground. And then there are a couple of people coming in, but very, very small. Not really, nothing to mention. And that's just the nature of the beast. That's who it is. And that's because we're so much ahead and we have so much ground. But I think that Boumadine, as it gets developed, is going to bring more people to Morocco when they realize that it's a tier 1 asset.
Yeah, because it's like a comment before. MX2 is the first example of you guys inviting a new team in and monetizing it and making, because you have so much bandwidth. Basically, Boumadine plus managing Zgounder, that's what you're able to do as a team right now. And it's a huge undertaking. So, but you have more capacity to identify project and perhaps partner up and do things like that. So if you're able to utilize sort of cooperation by inviting new teams to come in, Aya can benefit greatly. And MX2 is an example. So hopefully we can see more of that potentially in the future too.
And with our 1,000 employees and David's team in geology, we know almost like every region. Some of our people know the region, know the people. So we have a real first mover advantage of knowing and having people working with us that have been in these other regions and they know the region well. So yes, this first mover advantage is a real benefit. Today,
but like hypothetically, if you could acquire something and maybe it's sort of a Zgounder style thing where you acquire it and then you could invite someone else to join you in that venture or something like that. I mean, many things you could transpire, I guess.
We are looking at that as well from a couple of families that have what we think are great districts. And we're looking at that as well as an entity to grow in Morocco beyond Zgounder and Boumadine. Yes.
Yeah. We'll see. All will be revealed in time, I guess. But gentlemen, as always, great to catch up. I think we've had a comprehensive update now. Hopefully it's pleasing to all the listeners out there. And we'll be back, well, maybe before the PEA, we'll see, but otherwise right after the PEA. So thank you, guys.
Thank you. Thank you, Gorm.
Thanks, Gorm. Anytime.